All right, bet we can go ahead and start just because I'm going to record it anyway. So give me 1 second. Share my screen real quick. You should be able to see my screen now. All right, so the first thing I wanted to kind of go over this week is the news that's going on. It's going to be a very volatile week as far as news goes because we have a lot of statements being released. Again, I mostly trade things that are confluence with the US dollar, so that's the main news that I pay attention to. So tomorrow, we're going to have FOMC members speak. It's orange folder news, but given that FOMC made the markets very volatile last week, I would be on the lookout for this news statement just because it's going to lead into the rest of the week and how it most likely will start to play out. On Tuesday, we have CAD news here. We also have some very heavy USD news. We have ISM manufacturing at 9 o'clock a.m. So this is going to be a very big news outlet that, again, is probably going to either create the high or the low of the week, given that it's Tuesday, in order to figure out what trading range we're going to be in for the rest of the week. On Wednesday, we have ADP non-farm roll employment change. This is just openings. It's kind of just pre-market recap for what's going to happen on Friday's NFP. We also have open JMMC meetings, which this shouldn't really shake the markets all too much. But if you do want to pay attention to this, they will most likely be talking about things that will affect non-farm payroll going into Friday. Thursday, we have some ISM services. We can pay attention to this, but again, there's so much news happening this week that we're just going to have a very volatile week. And then obviously Friday NFP, I most likely won't trade Friday just because I know that last NFP wasn't too great, at least for me. So I'll probably sit the sidelines and just trade Monday through Thursday on this week. That's all of the news events for this week. So now we can start going over pairs. So last week, we murdered EU. I had been looking for this setup the entire week. Again, just a very good market maker setup here. We had sell side liquidity being taken over and over again. We broke below previous equal lows here. And then we had a retest of the highs. We broke. And then this is the FOMC news that hit last week, which eventually ran us to full R. This week, we start to remark up here. You can delete some of these things. Hold on, let me take this off real quick. So we have 1.1800 that got completely breached. Fair value gap that did get respected. And then we have our daily fair value gap that did never get touched up here. So I do potentially see us coming and rallying back. I don't know if we're going to be able to get back to this daily fair value gap just because we've already broken lows in structure. But I do think that this week can bring some sort of bullish EU because I am expecting our dollar to go bearish. Again, I should have probably started on the dollar just because this is usually the index that I trade most of the things off of. So we have our dollar index here. If we see the on the daily chart, again, I usually mark it by 500. So 95, 500, 96, so on and so forth. So as we see, we had this huge bullish spike. Then we had a consolidation period, had induced lows that were taken out here. And then now we're starting to rally higher. So now we're starting to get again into previous consolidation periods in price action. So we're most likely going to either do two things with all the volatile news this week. We're most likely either going to take out these highs again, because there's fair value gaps up here. There's places of unmitigated areas up here in the 99 area to 100 area. That could be a spike that we see, or we could potentially retrace back to about 95, 500, given that we do have a consolidation period down here, which is most likely what I'll be looking for because, again, the dollar has been rallying. Although we've been getting a lot of negative news, given that we had 7% inflation rates. And we also had the Fed speak last week, and it wasn't too good because, again, our inflation rate is really high. So I am expecting a bearish dollar to potentially come back either to 96 or 95, 500. Those will be the key levels that I'm mostly looking for. So yeah, just like with EU, again, we can kind of delete this now and just clean up the charts a little bit, mark out our monthlies and weeklies. So with that daily fair value gap, which to me is very important, we have those lows that are being swept, and then we have this monthly low here. So let's mark this up. We have our monthly low here, and then we have our monthly high here, but I'm not going to mark our monthly high because, again, that daily fair value gap comes before, and if we're going to rally all the way back to the monthly high, then we're most likely going to take out that fair value gap. As far as a weekly perspective goes, we have this weekly high here, which happens to be below our fair value gap. So that was our range of the week. This here. So there's our weekly high there. So now with our 4 hour, again, I am expecting, like I said, the dollar to go bearish. So I am expecting some retrace of EU, at least to fill some of these potential imbalances here that were actually left in the market. Again, once market opens, we're going to have a better sentiment. We're going to have a better idea of what it's going to do. But these are just some places that you could look to target for EU if we do start to go bullish again. We have this first area of major imbalance that would be breaking our previous equal lows. Again, let me change this here. I'm just going to mark this here because this was our break last week, which took us into downside price action. Because again, we had this consolidation period. We had this low that was formed in the market, and we had this break of the low. So again, we're going to have a two-way bias here. We're either going to come up and we're going to retest previous imbalance levels, or if the dollar goes bullish, we're going to end up just dropping off even more into lower price action. But if that happens, then I'll probably just reassess from a higher time frame because again, I am expecting bulls on EU. So if I don't see that, I'll most likely just reassess and then end up sending y'all something anyway. So yeah, we have those lows there. This daily fair value gap is really like, I understand that it is far away in a sense of a 4 hour time frame, but again, we can move this in a week, especially with news. I think we're very prone to coming out and taking out this previous daily fair value gap. So that is where I'm most likely eyeing for the week. So almost the same thing with GU. Again, another USD pair, so it's confluenced with it. What we saw on GU last week, I haven't really been trading GU as much lately just because price action has not been what I like to see necessarily. So we have our monthly, and then we have our monthly high. So we have our monthly low and our monthly high here that we are looking for. Again, on a daily time or on a monthly time frame, we had the rally of bulls, which took out equal highs here. And then now we have this retrace back down. So to me, we are looking like, again, given the way that we closed with this weekly candle, we've already rejected high side liquidity. We can potentially drop off here. But like I said, I am bearish on the dollar. So given the standpoint and perspective that we're in right now, again, just our high to our low, this is the range that we're in. I have talked about premium and discount pricing before, which we can just look at from the perspective of this. We have our high side liquidity and we have our low side liquidity. So given that we are in the top 50% equilibrium range, we can potentially be looking for sells. And if we're in the bottom 50% of the equilibrium range, we can be looking for buys. Again, it's not always going to be like that, but given that this is a monthly time frame, we are more prone to most likely either taking out low side liquidity or retracing back into these imbalance levels here, and then taking price action higher, which is ultimately what I would like to see. So again, we can take those two off, and then we can mark these up as our monthly high and our monthly low. We can hop on the weekly. So as we can see here, here's our weekly high level here, but instead of marking that, I'm going to just mark the last order block that was taken here. I do see that we have a bearish order block here that did push price action lower from that weekly perspective. So let's hop down onto the daily. Yeah, so the daily is looking like, again, we have this monthly low that we're respecting here. If we break this monthly low, we're most likely going to continue to fall off and take out lower PA, probably like 1.2500s. I can see us reaching this week. Definitely 1.300s, or yeah, 1.300s if we do break the low. But if we can respect this, then we would be looking at higher time frame PA, because from a daily perspective here, if we take our, what's it called, our ICT fib, we can see that we're getting into our golden zone here. So we're almost perfectly inside of the 62% level and our golden zone level, which is where we would be looking for buys, given that that is an optimal trade entry. And we can be looking to take price action higher. So this is looking very good for me this week. Again, I would like to see us hold this, and then potentially we can just ride this to the top side, because even from a daily perspective, as you can see, what have we been doing? We haven't been moving like that much to the downside. We have been pumping lower and pumping lower. But again, this can be technically just a form of consolidation. If you look at it from a trend line perspective, you can see it as a form of consolidation. But what I see here is, again, we did sweep these lows here. So we've already swept low side liquidity. We've already ran lows, and now we've started, even on the daily time frame, to print higher price action and break previous levels of highs. So this could be a very good entry. We could be looking for potential entries taking us at least to 1.400, but I think that we can even take out this consolidation period previously. Again, because I'm expecting a very volatile week this week. So that is my bias for GU this week. See, we have gold. All right, so gold. Again, me and gold have not been on a good track lately. It's just gold's just been playing. So I've kind of been sitting the sidelines with gold lately. But we can do a markup of it, because again, if we get an opportunity, then we're going to take the opportunity. The way that I like to mark up gold, I go key levels of 1,000 pips, so 1780, 1790, so on and so forth. And then we have 1800. So this is the range that we're in gold. If we hop onto a monthly time frame, the monthly is just straight consolidating here. So as you can see, we have this consolidation period. We have these lows here, and we have these highs here that are showing that we've been trading in this range. Our weekly time frame, very, very heavy consolidation here as well. And this is why gold has been very hard to trade lately, because again, when you're used to it just rallying or falling off, these consolidation periods can be very hard to try and spot good entries, along with the fact that gold is extremely volatile. Almost the same exact thing from the daily. So given that we know our perspective is consolidating, I think that we can get a bullish gold this week. I think that gold can potentially reach 1850s and take out these key level highs, because again, just like I talked about, I usually confluence most of my trades with the dollar because I trade cross pairs. So given that gold is negatively confluenced with the dollar most of the time, when the dollar is going down, gold's going to end up going up. And given that I'm expecting a bearish dollar this week, if we do see that, I can definitely see gold taking out these highs. And as well as just looking from PA from a quick perspective, we see that we have imbalance levels that have been left in the market. We have more levels of imbalance that have been left in the market. So we have multiple places in price action that we can potentially target for upside liquidity, along with the fact that, again, we are in that range. So if we drop off, then we're probably going to just sink. Let's look at it if we drop off, I can see at least 1760s being taken out, because again, we had this wick side liquidity that took out previous equal lows, just as we had previously talked about. We got those previous lows that were taken out by this wick. I don't think we're going to fall any lower than 1760. And if we do, then it's going to probably be another gold crash, which is kind of what we saw towards the end of last year. See, from an hourly perspective, I most likely want to see us open. I want to see us hold 1780. I don't want to see us break below 1780, or else we'll probably look to reanalyze, because again, just like we talked about, we'll most likely be reaching for lower PA. My gold bias for the week, we have NAS. So with NAS, again, I don't really like marking indices like pre-week, because they can really do what they want. But just with the dollar confluence, I think that NAS has a potential to fly this week. Again, there's a lot of fundamentals with NAS and things like that that are saying that we can potentially fall. I was reading something that was talking about it potentially falling another 14%. So if that's the case, then again, we would adjust our bias and just see that once it happened. But given that I am, again, expecting that bearish dollar, we can potentially see this gap filled back to 1500 minimum. And then given that this is an indice, we can probably see even higher price action this week, understanding how volatile it can actually move. And just from a perspective here, these highs are really fresh at 1600. So I can see us potentially rallying this complete rally this week and taking out these previous highs here, given that these are equal highs and given that there's a lot of liquidity resting here, along with the fact that we have previous levels of imbalance and inefficiencies that have not been filled yet. So that's my main perspective bias for NAS this week. We have US 30 as well. So almost the exact same thing with US 30. Again, the US 30 and NAS aren't confluenced with each other, but I kind of trade them side by side with each other. I don't really want to be selling NAS and buying US 30 because for the most part, they kind of move not in sync with each other, but if one's going bullish, the other one most likely follows with it going bullish. So again, we have these triple bottoms here that I can just see clearly. We have this low that was respected, and then again, a printing of more higher PA. We're creating nothing but more highs here. So potentially I can see us shooting on U30. Again, looking at these potential areas of imbalance here, 37,000 could be a very sweet spot if we do actually want to ultimately come and take out these equal highs here. 1 second. So if we want to come and we want to take out these equal highs, then 3,700 or 37,000 is definitely a key spot for us.
Ma'am, I'm all right. I'm on a Zoom call right now.
So that is the main things that I will be trading this week. Again, trying to keep it simple, trying to keep it easy, trying to look for the same models day in and day out. That's mostly the main things that we're looking for. So that's why I've kind of, again, you see me slowly narrowing it down. UJ was a potential. Again, if we don't get any movement on GU and EU, which I can't suspect, then I will probably end up adding UJ back because, again, that's just another dollar confluenced pair. But the way that the pairs have been moving and the models that we've been getting every day around New York Open, like 30 minutes before New York Open to like midway through New York Open. So for me, it's 8 a.m. Central Time to 10 a.m. Central Time. That's usually the trading range that I use. There's been some pretty good setups on each of the pairs that I mainly focus on. Is there any specific pairs that y'all are looking at this week? GJ, I knew you were gonna make me mark up GJ. Let's go look at GJ. Just a heads up, I do not trade GJ. Everybody, I can't stand it. It takes me out every single time. It's just not for me. But we can mark this up for the week. Again, GJ and GU, they kind of move the same, which is why I don't really understand why I can't trade it. But again, sometimes you don't do good with certain pairs. So I kind of can influence it with GU when I was to trade it. So just off of our GU analysis, I potentially think that we're going to go bullish this week. If we do an analysis markup though, let's see what we have. So we have these fresh lows here. So let's just mark. And so we have these fresh lows here that were barely taken out on a weekly time frame, as well as higher PA double bottoms here, which respected the fresh lows. So basically all I'm saying is that we had these lows being created in the market. We had a push, a rally that technically broke structure here. This is where we're looking for our structure break. So we have that structure break there. And then now we've retraced to the downside. But although we have retraced to the downside, we never broke low side liquidity. We did fall lower than our 79% zone. But again, we did start to go bullish. So that's not really too much of a problem for us to look at. Let's see. So there's our monthly TF. If we move down here, we have our monthly low here. We have our monthly high here. So just on the monthly, I see like that GJ has been consolidating for the past couple of months. So since probably like April last year, we've been in this mini consolidation period up and down between the ranges of 147,900 and 158,200. So for GJ, that's not a gigantic range. And even on a 4-hour perspective, we can see that's not necessarily too big of a range that we've been trading in from high to low, that we've been trading in for just the the past couple of months. So this overall perspective, again, we have created lows, we've created break of structure to the highs, and now we've topped out and came back down. So potentially I can see us retracing. We have 154 key level here. I want to see how market open respects 154. I can mark this here. I want to see how market open would be to respect 154. Again, if we can hold 154, then I'm definitely bullish on GJ this week, coming to take out these previous highs. I would love to see GJ try and spike out of this range that it's been in. Again, given that we are moving towards February, we're moving towards more volatile months, and we're getting out of the little slump of December and January. I can't see us actually rallying out of this range. Again, whether it be to the upside or to the downside, it doesn't really matter. But this range that we're kind of in is an ugly range, in my opinion. We do have on the daily time frame low side liquidity down here with these imbalance levels. We have fresh imbalances down here just off of a daily perspective. So if we do fall off and we do end up breaking 154 and then eventually breaking this key level low of the range that we were looking for, then I can see us coming down to this 150-500 level and then potentially going bullish from there. But just the perspective of right now, we want to kind of focus in on this 154 level and the range that we are in right now. And this is probably going to give us a good sentiment as what it is going to do for the rest of the week, along with the confluence of news. Pull this up like this. There we go. So yeah, 154, that main level. We'll see how it respects 154. And from there, we can create a sentimental bias for the rest of the week. Let's see, give me 1 second. Okay, cool. Is there any other things that you guys are looking at? Perfect. Except for Tyrese. Okay, yeah. Kind of just want to keep it simple. Again, this is gonna, like I said, moving into this week, I'm expecting a pretty volatile week. So I expect us to potentially have some big moves on each pair. We don't got to focus on 100 pairs. 3, again, most people say 3 to 5 pairs is perfectly fine for you. That's kind of what I'm moving towards as well. Again, I don't really trade multiple pairs, but these are the main ones that I'll be looking for. But if we don't get a move out of these 5 pairs, and it most likely just won't be a trading week in general. So we'll be looking for those moves that we did line up. I'll of course be sending updates and seeing what we do, what ranges we do move in, and if analysis does get changed. Again, if we start breaking lows on dollar cross pairs, then we'll most likely be looking for bearish. And again, we just flip our bias, we'll remark, and we'll go from there. Again, we can have this weekly markup, and price action can open and go completely against us. So it's all kind of just about reacting to what we're seeing, and then just adapting to what trading environment we're ultimately in. You looking at anything else this week, Danny?
No, not really.
Okay.
I'm actually, just getting back in. I didn't have my eyes on anything specific, to be honest. I think I'm going to take all week and focus on GJ, since you just broke it down the way that you did, and it's near that key level. So that key level is probably going to decide everything. And like you say, if you bump into the news.
Given that, and especially given the PA that GJ is in, again, we just talked about that consolidation period that we have had. Just looking at the monthly time frame, again, we've had this is, let's see, the last bullish candle that uptook was March of 2021. So from April of 2021, we've been literally in this consolidation period. Again, with all of the new spikes, and given that we are now moving towards the beginning of the year, investors are stepping back into the market. I want to see what we potentially do from there, because again, all of 2020 into 2021, we ran bullish. Even before that, 2018 through 2019, we had bears coming into the market. And now from May 20 of 2021 to now, we're in a consolidation period. So some pop has to be coming. Whether that's this week, whether that's next week, we don't necessarily know that. But again, we can still get good moves inside of here, just reacting off of what we will be doing, and then just taking it either to relative equal highs or relative equal lows, depending on where you're looking at the market from.
Right. So is it safe to say that once it breaks out of that consolidation mode, whichever way it breaks is probably to be the direction that it'll go?
Most likely. That's literally the bias that I'm looking at. If we do break this consolidation period here on the monthly to the highs, then I think that we're going to end up taking out either 190s or at least 180s minimum, because again, we have fresh imbalances here at 180s. And then if we do spike even more, then we're going to end up taking out either 190s to 200s, because again, that's our next area that we had our down pushing candle that never got mitigated.
Makes sense. Yes.
So that's the way that we'll most likely end up breaking there. And then if we do end up breaking again out of the downside range, well, we've already marked that up on the daily. If we end up breaking that downside range here, again, that 154, and then end up breaking 153, which was the last low that was printed that got retraced from, then we're most likely going to end up taking out 150s to 150.500. Because again, what do we have down here? Fresh imbalance, as well as this is the last order block that pushed price action higher.
Yeah.
So those are
it looks like a pretty clean setup. That's why I'm very interested. Looks like a pretty clean setup. Might take a while to play out. It looks like it's going to happen.
Correct. And again, this is the daily time frame. So we have this daily analysis. Once we get day in and day out of the week, we move down. Again, I have my weekly analysis on the daily, weekly, and monthly. From there, I'm on the 15-minute, and then entries are from the 1 through 5 minute. Just because I'm mostly a scalper, and in my time, I'm not going to wait for price action to break down here for me to see an entry. That's on a daily perspective. So we have our overall perspective. From there, we're going to drop to those lower time frames, and we're going to see what we're getting day in and day out on those lower time frames, and then that's how we're going to end up trading and making our money through the week.
Okay, right. Seeing what is going on a larger scale, and then actually catching the move in the middle.
Exactly. Top down analysis. Again, if you understand that there's imbalance here and you want to see this daily candle fill here, there's no point in trying to buy the daily and putting your stop loss under here when you can drop to a 15-minute, refine your trading range highs and lows, drop to a 5-minute, and find an optimal trade entry, chalk and flip, whatever way that you'd like to find your entries in order to get basically sniper entry, so you can get that 1 to 5, 1 to 10 R, and then just be done after a couple of days.
Right. Makes sense.
But yeah, that is the main things that I had for this week. You guys do not have any more pairs that y'all are looking at. We should be pretty good for the week. Again, I think this can be a very good week. We just got to be active within our trading times, and then just sticking to our plans and sticking to our bias. Or not necessarily sticking to our bias, but mostly sticking to our plans. Again, our bias can get changed if we do start to change directions. We want to have an incentive bias for the week, but we're not going to hold on to that bias, and price action is obviously showing us rejections, or obviously showing us that we're not going to move in that way.
Right. Makes sense.
Yeah, that is mainly that for today. Again, I do have this recorded, so I will post this later for anyone else who wants to see the markup or just go back and pinpoint a couple of things. But throughout the week, of course, I'll be giving the updates and seeing what we do. Of course, bro.
I got a question right quick. I'm pretty new to this Zoom thing. Like, how can I see the comments and all that people are typing?
So there's it should say more. There should be 3 dots that say more, and then it should say chat that you can click on.
Okay. Yeah. Okay, and then how do I cut my video off so that I'm not necessarily on the screen?
You're off right now.
Okay, so I did that part the right way. All right, cool.
But yeah, let's have us a great week and take some very good trades this week. It should be, again, like I've been talking about the entire Zoom, this should be a really good week, a really good volatile week. So we just got to be in the markets that are ordained trading times, and then take the setups that are presented to us.
Yeah. One thing that killed me though, bro, is I got to be to work at either 5 in the morning or 4 in the morning, which means that I got to get up at 3 or 4 And right around the time when I'm supposed to be getting into it, I'm actually, at work. I'm a manager. I'm taking care, trying to take care of business. So sometimes I try to take other people's signals that pretty much go against what I know, and I pretty much kill myself. And I don't really have the time during those hours to sit down and look at what I need to be looking at. I even thought about taking my computer to work a couple times, but I can only spend so much time on it. And it's like
Exactly.
the morning time is the time that's jamming. So I figure I'll try to find one pair, focus on it, and see if I can milk it. And so far, I think I'm gonna go with this GJ thing. We already looked at what the monthly do. Go ahead and scale down to them smaller time frames, figure out the entry, and then just play the consolidation up and down.
Exactly. And so another thing that I would say, given that you do, again, you're at work at 4 or 5 in the morning, so that New York time is going to be very hard to trade. So the main thing with trading times, again, your trading times just have to be confluenced with what your pairs are. I know people say don't trade Asia. People say like New York and London are the most volatile. Yes, I do agree with that to a sense, but at the same time, at the end of the day, if you have, depending on what pairs you're trading, that's going to depend on when you're most volatile. So I had talked about UJ earlier. So UJ, for instance, is an Asian session pair. It mostly moves in the Asian session. So that's why I had GJ added, because again, if I wasn't catching anything in New York, I could look during Asia and catch potential setups on GJ.
Right.
Just because that's its high volatility time. So really what I say is like, if you're finding that you're like not able to trade in the morning, like it's too much, like try and look at something like UJ or like Euro JPY, like something that moves predominantly in Asia session, so that like you actually have the time to analyze
Right.
the pair and you
So
actually have time to trade it.
one thing that always confused me, bro, I know this is gonna sound pretty stupid, and I asked you before, but like, what are the times of the different sessions? I know New York is like 8 to 10.
Are you Central Time
Yeah,
or
well, yeah, I'm on the East Coast, Baltimore City.
okay? So you're Eastern Standard.
Mm-hmm.
Okay, so times it. So it's 2:07 for you now. All right, cool. So y'all are an hour ahead of me. All right, so for New York session, you're going to give me 1 second. Where's that thing at? Where's that time frame? All right, so New York session for you is going to be 9 o'clock a.m. to 5 o'clock p.m. So that's your New York session. 9 a.m. to 5 p.m. is when New York opens, and then NYSE, which is the New York Stock Exchange, that opens at 9:30. So basically, you have like New York open, and then you have the stock exchange open. The only difference is that the stock exchange is when like the indices open up. So that's when those are going to be the most volatile. But from 9 to 5, that's going to be your New York session.
Okay, what about Asia? Oh, okay, you're gonna finish. Thank you.
Yeah.
Thank you.
So from 6 to is it 1 a.m.? Because it's 12 months. Yeah. So from 6 p.m. to 1 o'clock a.m. your time, you're going to have what's it called? Asia session. So 6 p.m. your time to 1 o'clock a.m. your time is going to be your Asia session.
Okay.
And then you're going to have 2 a.m. my time, so 3 a.m. your time, 3 a.m. your time to 10 a.m. your time is going to be London session. So the thing about London, we're kind of going to redefine that. So I usually say 3 o'clock a.m. to 7 o'clock a.m. is that's your predominant London session.
Mm-hmm.
And then from 7 to 10 o'clock a.m. is going to be it's called a crossover. So basically like it's a kill zone session where New York and London like cross.
Overlap. Yeah.
Exactly. So that's basically how you're going to have it. So you're going to have your 9 to 5, which is going to be your New York. You're going to have your 6 to 1, which is going to be your Asia. And then you're going to have your 3 to 10, which is going to be your London session.
Okay. All right. That makes perfectly good sense. And then one more question, if you don't mind me being this a-hole that I'm being. As far as the pairs, is it an easy way to tell which one's long with sessions? Like maybe UJ's is JPY's is this, or
So for the most part, it's going to be the dollar crossing pairs are going to move the most in New York session. So EU, GU,
right,
all those type of UJ or not UJ, EU, GU, like Euro GBP, like anything that kind of has USD as the second is going to be or as the second pair is going to be most volatile during New York.
Exactly.
You then have things like GU, GJ. Those are going to be most volatile between like London to New York. So like London to New York crossover, like around that time from London through New York is when like GU, GJ, like those are going to be more volatile because again, the GBP is London. So that's why those are going to be most volatile at that time.
Yeah.
And then you have like UJ, EJ, like Euro JPY, USD JPY. So like certain pairs like that, those are going to be most volatile during Asia session because again, if they don't have a US dollar cross and like the JPY is last, then it's most likely going to move faster in Asia session.
Right. That's pretty much what I figured. Yeah. Oh man, that's pretty cool. So this is your trading list you got up. What is it? Trading chart?
Trading view.
Yeah, trading view. I'm sorry.
Mm-hmm.
Yeah. I have a trading view account as well, but it just seemed I learned on Hugo's way. So I mean MetaTrader 4. So
Okay.
you know, when I bought Trading View and they were saying it's easier to do your markups, blah blah blah, and just trade on MetaTrader 4. But it seems like MetaTrader 4 is just easy all around the board for me.
So honestly, that comes down to like you and your trading style. So for me, I don't like having my executions and my markups on the same time frame because like one of the main things for me in trading is like discipline. So like a lot of the times if I'm marking up on my MetaTrader, I'm going to be more prone to take a trade. And like if that trade is not in my trading time or whatever, then I'm going to end up most likely losing that trade because again, I'm not sticking to my discipline. So for me, the best way for me to stick to my discipline and stick to my trading plan is for me to just have Trading View. I do my markups on Trading View, and then I just set my limit executions on MetaTrader.
Yeah, that's pretty cool. Helps the discipline. That's awesome.
Exactly. But the main difference between that is that you just have to make sure that you're making the right count. So your Trading View chart is most likely not going to be the same chart as your broker. It's going to almost be exactly the same, but like your number, like this is 115,194. Your price on your broker might be 115,190 right now. Like there's certain things like that where like it can be a different pip differential because again, every chart is different. There's an Orlando chart. Like if you just type in GBP USD, for instance, you see how many GBP USD charts come up.
Mm-hmm.
Like there's a whole bunch of GBP USD charts. So like each broker has kind of their own chart. They're all going to kind of be in the same range, but each of them is mostly going to be different by a couple of pips. So if you're marking up on TradingView, you just got to make sure that it confluences with the same like price as your broker. Let's see your breaker is here. You have to go on your broker and see where that breaker block is because like, let's say that you set a limit execution at 115,184. That's where you want to get in. But really on your broker, it's supposed to be 115,166. Then it would have missed your limit because again, on TradingView, yes, it tapped you in, but on your broker, the spread, the everything else, like the pip count is different.
Right.
So that's why a lot of people like just using MetaTrader 4 because they can see on their chart the exact thing that they're executing. They know that when they mark up that breaker, that's the breaker on their broker. And so they can just take the execution off of that. Again, it's really to each is their own, like whatever is most comfortable for you. It doesn't, every trade is different. So every trade is going to do a different thing.
Right. So, and for the most part, it's like not like you have a special time. You just look for trades whenever you look for trades. And when you find them, right?
For me specifically, I only trade 8 a.m. to 10 a.m. So like that's where my trading plan and things like that come into play. Again, when I started off, I was kind of just doing that, just trading whatever times, trying to figure out what setup is what. But just as I've learned more, as I've been studying and stuff like that, I just see that my most volatile times for my pairs are 8 a.m. to 10 a.m. I can find multiple setups in between there. And I trade what's called models, which is basically just like you pick a model that like, not necessarily you pick a model, but I study a lot of ICT concepts. So like there's what's called an MMSM, which is a market maker sell model. So it's just a specific thing in price action that you want to see over and over again to be able to catch entries. So this is what the ideal model looks like. You have highs being broken in the market. You have a high that's taken. You have a low that's taken. And then again, you're going to have different expansion periods where you can look to get into the market. So that's like one of the models that I like identify and I trade. So if I see that model within my trading time, which is mostly where it's going to come, then that's a good model, a high probability setup for me to take. So that's kind of just where I've shifted to 8 a.m. to 10 a.m. If I don't get a trade in that time, then that's the days that I just don't trade.
Cool. Sounds like a winner, man. Sounds like a winner. I mean,
Yeah, that is the main things. Again, the most important thing in trading, the technicals, like this part, in my opinion, is easy. To some people, it comes hard, but the marking up, the looking at the chart, that's the easy part. It's the psychology part that is the killer. Like that's the main part that's going to separate you from being profitable and you not being profitable is how good your discipline is, how consistent you can be, and how much you can be able to like understand. Like again, you're the only person who fully understands yourself, so you know what you can hold, you know what your discipline can hold. It's just about shaping a plan, a trading plan that fits that.
One more question I just thought of right quick.
Mhm.
How do you know the daily highs and the daily lows? Is it like anywhere specifically that tell you those, or
So just hop on the daily time frame. So if you go on the daily time frame, this is a daily candle. So this was the last daily candle. This is the 28th, which was Friday. So that was the daily candle of Friday. So if we just look at the daily candle, this is the daily high and this is the daily low.
okay,
That top of the wick to the bottom of the wick. Now, this place that it's at right now, this was where price action closed.
right,
Meaning that we have our daily high, our daily low, but price action, it ran the lows, it ran the highs, but it ended up closing right here. And so that's why you see it would be a bullish daily candle that closed here. But you can already identify your highs and your lows just off of what the entire candle does.
right,
And then same thing again for the weekly and the monthly, which is exactly how we look at it. So we have our weekly time frame, we see our weekly low, and then we see our weekly high. Again, this is a whole weekly candle, our low, our high, and we know that this is where we closed. So we had a bearish weekly candle that closed down here, but this was the high of the week and the low of the week.
right.
And so that's kind of how you identify your ranges as far as candles go, because each time frame, whatever time frame you are on, that's what each candle represents.
Right. So I guess from our next candle, that's when we'll be able to make some serious judgments, see what's happening then.
Correct. And again, that's like the way that I trade indices, exactly, which is why I say I don't like marking them up on a overall perspective time frame. The way I trade indices is each day before market. Again, I trade from 8 to 10, around like 7:50, 7:55. I look at the previous daily candle. I look at the high and the low of the previous daily candle. As you can see here, every single day, on an indice, at least every single day, one of the highs or the lows of the daily candles being taken out. Here, the high was taken out. Here, previous high was taken out. Here, same thing, and so on and so forth. You can see every day a high or a low of the previous daily candle is going to be ran and taken out. So given that I understand that, I mark up the high and the low of the previous daily, and then that's how I get my sentiment for the day. Now I'm going to see, well, if price action is mitigating here as a bullish candle when at market open, and we have this high and this low, what's most likely to be taken? Well, this low's already ran these previous two lows, so I'm going to predict that this high is most likely to be taken. From there, this is where I just hop down to my lower time frames. I know that we're looking for the high to be taken. Now I'm looking for my model with US 30 and NAS. Again, for NAS, I go every 125 pips for key levels. U30, I go every 250. So every 125 pips, and I'm looking for a sweep of liquidity under a key level in order to take price action higher. So what do we see here? We had price falling off. We had this key level that was respected with this sweep. We swept under, but we showed that we didn't want to break. My ideal entry would be somewhere over here inside of this area and then taking it to the next key level and then so on and so forth if I do want to leave a runner. But again, wasn't in my trading time. This is 7:50, which is 6:55 my time. We have to wait. This is 10 o'clock, which is 9 o'clock my time, in between my 8 to 10 range. And so what happens here? I saw that this expansion down here had already broke the highs. So I knew potentially we wanted to have a retrace in order to come back, because I know if we break these lows, then we're going to end up continuing to fall off. And I'm already predicting that previous daily high level is going to get taken. So what did I wait for? I just waited. Again, we have a huge imbalance level here. We also have what's called a breaker here, a failed order block that turns into a breaker block. Again, this last down candle into the up candle. So we had that breaker there, which is what I was looking for. As soon as we came down and respected that low, that's where I got my entry on execution. And then again, I was taking it to the previous level. Usually I like to take every 125 because I like to aim for a minimum of a 1 to 3 risk to reward. But here, these are when you can leave those runners running. Again, you have New York session, pre New York was respected. New York session comes and taps you in. You know that you're most likely going to take out the previous high of the day, which we had already identified and marked out, which is why this was a valid place for me to take profit. And then that's how you can, again, there's a 1 to 11 R that was secured because, again, you're just taking price action from a time and price standpoint.
Makes perfectly good sense.
And so those are like the things that, again, just repetition day in and day out, seeing what model you want to trade, what setup you want to see, but you just want to be able to train your eyes to seeing the same things over and over again. If you could take the same setup, again, this setup presents itself so many times. What happens here? Sweep of the lows. Again, this is out of my trading time, but what happens? Sweep of the lows. My ideal entry would be once we retrace above the sweep with a stop loss below here. Again, you're going to take it to this key level, taking it to this key level here. This is a 1 to 2, which wouldn't be ideal for me. So I would have had to at least look for the next key level, which would have been 375. So 15,375 about right here. And again, that turns it into a 1 to 4 if you are looking for the absolute expansion.
I got it.
So yeah, bro, just making sure that you're like studying your models, just train your eyes to see what you want to see. And then again, that trading plan, like I talk about all the time, trading plan is probably one of the most important things. Like it's going to help you stick to your discipline. It's going to help you actually follow something, and it's going to help in the long run. Every successful trader.
Honestly, I still have to write a trading plan. It's been like 2 years, man, maybe 2.5 years, and I've been dipping and dabbing, haven't really, taken it serious the way that I have, and I'm supposed to. And I noticed in doing that I've been blowing around a lot of money, but I have yet to actually really sit down and treat it like a job the way I'm supposed to. I was on it at one point in time, and it got to the point where I was like practically breaking even, which was all right. And then I fell away for a little while, and then I started trying this and trying that and different strategies and so much and so on. I pretty much plan to go off of price action myself, along with a couple smart money FX tricks, and go ahead and go for it, but I just got to put my time and effort in, as well as being disciplined. And that's one thing I love about you, brother. You're very disciplined. You've been getting it on for a long time, and on top of that, you're a very positive brother. I think I told you that before, and I mean that, bro.
And again, that's the end goal. Just making sure, like I said, once you sit down and make that trading plan, you just the main thing is sticking to it. Because again, you can make a trading plan and not stick to it, then a trading plan doesn't mean anything. But if you make that trading plan and you truly stick to it, you will see the prominent progress. Because again, you can't. The only way that you blow accounts is by bad risk management. It doesn't.
Well, one of the things bro, a lot of the time when we're talking to the mentors or talking to guys that know, they say things to us that we know or understand a little bit, but we really don't know about. Like, for instance, a trading plan. Everybody know what a trading plan is. I'm quite sure everybody on a Zoom call or everybody you talk to know what a trading plan is. But let's keep it 100. Like, who knows how to actually write a trading plan, or who really knows what a trading plan is besides a piece of paper? Like, I don't know how to write it. I never even really saw one to be able to mock it. I sort of kind of know what should be on it, but I just, I don't know, bro. Maybe I don't put in the proper time or what have you. I never even recorded a trade, bro. I'm just being honest with you and telling you everything, so you know what you're dealing with. We've known each other for a while through communications, but this is like our first time talking. But I didn't, and just hustling, and because the money don't matter, I didn't bleed thousands, bro.
It makes sense. And like the thing is, here. So I'll show you this, for instance. So the trading plan, again, it comes down to what like you want to write ultimately, but I do understand what you mean by the guiding thing. So what I did, I just looked on YouTube. I found like Swag had a video. So I see had a video. There's a couple of other mentors that had some videos just like directing.
Oh, bro, speaking of Swag Academy, I was dealing with him, talking to him over Discord and all of that, man. That guy burnt me out of $5,000. Him, and after that, the Mamba FX dude got me out of $1,000.
Yeah, Mamba I've heard a lot of things about that. Again, that's why, like, me personally, I'm so veered away from that. Like those again, a mentor is good. A mentor is great to have, but at the same time, at the end of the day, it's you versus the markets. It doesn't like if you know how to trade, it's really you versus the markets and you versus your psychology. So I don't find a need in like paying for signal services, paying for mentor. Like
Man,
there's so much free
look,
information online.
I was
You
I
don't
was
need all that.
I was real heavy into it at one point in time. I mean, I'm a lot better now with my job and all, but I was seriously ready to fly on out and plug one in swag, man. I was gonna
But
give it to him, man. I'm Baltimore City to the core. I was gonna give it to him, but it ain't even working, and I'm not on that no more. But I really was gonna get him, man. He took me for 5,000 on like the old, you're a bitch shit. It was crazy, but it is what it is.
insane. And that's why I say again, like those are just like experiences, your learning experiences. At the end of the day,
Exactly,
when you
exactly.
making that 100K, that ain't gonna matter. Like this, it's really not. When you're at those goals, it really does not matter. But as far as like again, a trading plan goes, again, it can be as simple as this. So I got trading plan for the funded account. Well, what type of trader am I? Scalper intraday. My goals for it. I have what I'm gonna do on Sundays. I'm telling myself on certain occasions I can add one more pair, this and that. Again, analyzing the monthly, weekly, moving down to 15 for analysis, drop down to 1 to 5 TF for entries. Again, I have everything like set in stone as to what I want to do because at the end of the day, you want trading to be like clockwork. Like there's already so much psychology like built into it. You don't want to make your life even harder by like doing things that you don't need to do. So trade recap, I will screenshot and document after each trade in order to critique myself. Pip goal, minimum 1 to 3 R, taking 70% off then and letting a runner run. My trading hours, 12 a.m. to 4, which is late. This can even be changed now because I don't trade UJ anymore. But 12 a.m. to 4, which is when I was trading UJ, and then 8 a.m. to 12, which I refined to 10, that I can trade. And those are the hours that I want to trade. Again, this is the note to self about being able to look at the charts at other times, but my most ideal and profitable trading hours right here.
Right.
This is where
do you journal, just out of curiosity, do you journal your trades?
Yes. Every single one of them.
That helps out, I guess.
100%. So the thing about, again, everyone does it differently. I do it in 2 ways. I write, so I have like daily recaps, which is basically where I just journal my daily recap of the day and what happened. And then I also have a Google Drive. So in my Google Drive, I basically find it 1 second. So I have what's called case studies. So case studies, again, day in and day out, we go through and you take the trade that you took, I go entry, exit, and then result of the trade with a screenshot. So this is kind of just how I log my trades. Again,
but then like bro, like things like that, when you do things like that, it like really trips me out. Like right where you holding that top screen, right where you had the cursor at. Yeah, that was, how in the hell did you know from that bottom there when it broke that low, how did you know it was going to shoot back up like that and then come back down like to that order block? How did you spot those order blocks?
So like, okay, so this is called a smart money trap. Basically, all this means is that EU is creating lower lows while the DXY, the dollar index, is creating higher highs. We call it a smart money trap because again, it means that the Euro USD is disconfluenced with the dollar. So we had a smart money trap here, which showed that we were going to potentially end up going bearish. Dollar was running higher. We knew that EU was running lower. So we had we had this induced liquidity that came down and broke this previous order block. This right here was an entire order block here. So this order block got broken, but we never broke these lows here, which these lows mitigated this triple bottom here. So we know that there's a lot of sell side liquidity built up, and we know that these lows are very prominent to be taken, along with the fact that what happened here, as soon as we broke those lows, we retraced. We never broke this previous high here, which if we broke this previous high, all of that would have been invalidated because we could have potentially broke higher. But we know that price action's bearish. We had a retrace of the highs that never broke the previous order block that had previously been mitigated. Then we had a consolidation period. Now,
and
from here again,
it was going to fall.
Yeah, exactly. So from here, this is just where it comes down to like being in the markets and stuff like that. I've seen this a million times. Like the smart money trap, which is disconfluenced by a high that never gets ran. Now we're into a consolidation period on a 5-minute time frame, along with the fact that we are in optimal trade trading time. So this was late Asia session. What's it called? So my entry and exit was late Asia session. So again, this confluence here, which is why it wasn't as volatile and didn't completely drop off. We had this consolidation here. I had the low body to the high wick because I know this was the last technical area that we should fall off from, given that we already had mitigated the order block and we didn't run any higher. I knew that we most likely needed a retrace up here because again, on a 1 minute time frame, on a 2 minute time frame, this is an order block. There's price action inside of this wick that we're potentially looking for PA to come off of. So that's where our ideal entry should have been. Again, we missed that, and then it started retracing down. Once we retraced down, that's where I got my entry. And then I just put stops below the high or above the high because I knew most likely we're going to take out this induced liquidity here because there's triple bottoms here. So what happens? We take out those triple bottoms. That's where my profits were taken there. And then again, entry execution as well. Take out the bottoms, exactly what we were looking for from the original entry.
Right. It makes sense,
again,
man. I'm so anxious to give it a shot now. It seemed like only thing open on weekends is Bitcoin, right?
Weekends, I don't even look like for again, some people like to trade like Ethereum, cryptos and stuff on the weekends. My weekends consist of like looking at forex pairs, back testing and forward testing. Again, like I'm not mainly going to be trading cryptos. I'm not going to be trading Bitcoin on a day-to-day basis. I'm going to be trading EU, GU, NAS, U30. So on the weekends, again, just taking that time to kind of focus and keen in on what you need to be doing, like back testing, forward testing, seeing your models, like going through, watching YouTube videos, trying to figure out like how it is that you can just become better. And that's the main thing that I just look to do on the weekends rather than like, yeah, looking at price action on crypto and stuff like that can help, but it's not what I'm trading ideally.
Right. I understand completely there, sir. It makes sense. You've shown me a lot. You've shown me a definite lot. I hope it all works out.
Yeah, it's just again, like I said, once you get that plan down, this should be like one of your main priorities right now. Just figuring out like a plan. That's the main, because once you have a plan, then you can follow that plan. And from there, you're going to be a lot less prone to doing anything. Again, we have our do's and our don'ts in the market. This is what I can trade. This is what I can't trade. And then a key tip, and then risk management and a quote to end it off. That's my simple and easy trading plan. I look at it on a day in and day out basis, and I follow it to the T.
Right. It makes sense. I'm with you.
But yeah, that is the main things for today. Again, the last thing, just that journaling note. I'd say like even if this freaks you out, just at least be like writing stuff down. So as far as like how, like just do a recap on your day. Like what tomorrow is the 31st, January 31st. At the end of your trading day, write down how many trades you won, how many you lost, and your end result as far as percentage for the day. And like that itself can be a lot more helpful. Just because you understand that you're documenting what you're doing on a day-to-day basis.
Mm-hmm. Right. I make sure I will do that. I'm definitely going to give it a shot. I'm gonna try to make sure I pay more attention to my channels. Now, what happened was I ended up cutting my Discord off by mistake. So I was missing, well, not even by mistake, but it was a lot going on. So I was missing in action for a while, but I'm getting myself back together now. I was actually in a car bomb, man. My goddamn car blew up with me in it. Then not to mention me having COVID not too long ago. Yeah, so I've been like going through it, bro. Just blessed to be alive. But I'm trying to get back into this, man. To be honest, I really don't want to work for anybody. If I might be able to do this for 2, 3, 4 hours a day and be able to pay bills and all, So
exactly, and be completely done. And that's the end. Again, it's okay to step. I always say that it's okay, like to step away. Like again, everyone has their personal problems. Everyone has everything that they're going through. It's okay to step away from the markets, especially in times of stress. But like you're back. Like you're back. You're trying to learn. You're still trying to learn. You're still trying to grow, and that's like the most important part. Like as long as you're trying to be consistent, as long as you're making an effort to get better, you're gonna see results.
Right. Yeah. I'm hoping it all definitely work out, and I'm definitely going to be reaching out to you, bro. Just maybe for some ideas or to let you know about some things I'm working on. I just want to learn how to do this, and then I notice, it's not even really about the money for me. I just really want to learn the skill. I want to know what I'm talking about. I want to know what others are talking about. I want to know inside out.
And that was the the main thing for me as well. Like the money, again, like everyone says, like it sounds corny, but like the money will come. Like it's
Yeah,
at
I
the
ain't
end of
mad.
the day, if you can catch a consistent 1 to 3 a day, again on a 50K, that's $1,500 a day. Like, and that's again, consistency is key. At the end of the day, consistency is key, and just understanding that like if you master the skill, then everything else can be got. Like you can attain money, but like you can't really attain a skill unless you work towards it. Like
I'm gonna be honest with you, man. To take it a little serious, instead of just playing around with the demo, I would put $100 or $200 in an account and mess around with, you know, point ones, point twos, point threes, point five. Just because I know just because it's my own money, I would try to take it more serious, you know.
And that's what I always recommend. I always say demo is a foundation thing. What I use, the main thing I used demo for was trying to figure out my lot sizes for the 50K, trying to like when I very first
See what it
started,
really cost me.
Exactly. When I didn't know anything, that's what I used it for. Once you get a concept and idea, a demo does not do anything, in my opinion, because again, the psychology aspect of having a live account versus a demo is nothing that you can even resemble. Like the emotions that you go through from seeing your live funds go up and down from a demo, it's a lot different. So I say, even if it's $50, like there's brokers now, again, Hanko Trader, that's who I've been using. Hanko Trader, you have a minimum of what? I think it's a $100 deposit on your first deposit, but like you can get a 10% bonus. You can get like different things. But even if you deposit $100 and you only want $50, you can withdraw that 50 and still have the account at $50. Again, there's so many ways where you can just put in some amount of money and then start like actually working on your psychology, actually working on the skill aspect of it, and going from there. Because eventually, like that's the last barrier that you have to overcome. Like I said, this technical stuff, you can learn this is all over YouTube. There's no thing on YouTube that can shape your psychology other than you being in the markets and you like actually putting in the work to try and shape it yourself.
Right. You're absolutely right. Yep. Well, I'm trying to get it in. I hope it work out for me. I want to learn some of what you learned, brother.
Of course.
Yeah. But I appreciate you talking to me. Appreciate you giving me the knowledge, bro.
Sir, always, bro. I hope that we have an amazing week. Again, I will be consistently sending updates and just letting y'all know what I'm seeing. But other than that, yeah, we gonna kill this week.
All right, that's what's up, brother. We waiting on you.
All right, y'all have a great rest of y'all day.
All right, bro. You have a good one now.
You too.